This was a trade I took today, right after lunchtime. We took out the lunch highs, and I got into a short position, sold NQ, and I really just wanted to see price accelerate lower and take out the lows right around 22,143. And so I got into a short off of the inversion FVG that you can see with the box. I annotated the FVG with the box, and that was really my framework and the narrative and logic to go lower. And I really used a concept of time, which was the 130 open. 130 opened up and manipulated, taking out lunch highs on a Monday with really no news. It was a pretty choppy day. Choppy days generally take out both sides of the market, and it generally doesn't allow anyone to make money. And so I was really keen in on that box I drew, which is a FVG that we inversed. And I want to see that act as support to go lower. And I was really keen in on the dash line, which is 50% of that range. And I didn't want to see price trade back up into the upper half of the FVG. You see how it wicked above 50%? That's fine. You see where my stop's at? It's right like in the upper half, because that's an area where I don't want to see price trade back into, because it already kind of did its work. It traded back and forth in that range, then it broke lower, and now it's kind of retesting it, and I don't want to see the top end of that range get retested. So that's why I have my stop loss right there. And so my stop loss does end up getting hit, but you'll see how I jump right back into another short position soon after my stop got hit. You see how, like, when my stop got hit, or when it's about to get hit, how I don't let that, like, fluster me. It's like, okay, whatever, my stop got hit for minimal loss. But I still kind of have an idea that price is probably going lower. So I'm not going to just get scared of taking another entry because I was wrong. I don't care about being wrong. I care about making money. So you'll see here in a second that my stop loss ends up getting taken. I get stopped out, and then price action starts to show me more signals that we're going to continue and go lower. Usually the smart spot to have your stop loss would be above the FVG, the bearish, or the inverse FVG that I drew, would ideally be the best spot for a stop loss. But because it's a Monday, right around lunchtime, kind of back and forth and choppy, and that was a large range, I didn't really want to risk that much. So I was totally okay with getting stopped out like I just did. Whatever. Took a tiny loss. And if it shows me more signals that we're going to continue lower, then I'll just get back in and I'll take another entry off of another PD rate that I see. And so I see that we're starting to break lower after my stop got hit. I'm like, okay, well, let me maybe take another trade here. So I'm shuffling 3 different time frames right now, just to make sure. Back to the 1 minute. Now I'm keying in on this wick, which is a swing low, and I'm really watching 50% or consequent encroachment of that wick, which is that dashed line inside of that box. You see how price is tapping it right now? I want to see price close below that dashed line. If it wicks like that and the body stays above it, there's no entry for me. If it closes below it, that's a signal that it's probably breaking lower. And you'll see I'm about to catch a short on this retracement, as you do see how that down close candle did close below 50%. I just caught a short, moving my stop loss right into that order block. I take profits at the lunch lows, and now there's a little wick it's about to trade back up into and tap. The lower wick right there, that's that lower wick. I want to see price just tap it and then start going lower as I'm shuffling through more time frames. See how it's tapping it right now, the lower end of that wick? Now start breaking lower. I don't want to see it trade much higher up into that range. I want that to be an immediate rebalance where it just taps that wick instead of leaving an FVG, immediately rebalances that range and then starts breaking lower. Now that's what I want to see. Doesn't mean it has to do that. So you see how it's hovering around the lower end of that wick. Now I want to see it break lower, like go, like right now. That's what I was telling myself in my mind. Like, break lower right now. Okay, great. It's breaking lower. And I know this isn't a lot of money, It's really not a lot of money, but if you can find a setup like this every day, and then you trade 5 micro contracts or 1 mini contract, now you're up a lot of money. Or if you can find multiple setups similar to this every day, where you're making $30, $40, $50, $80 a trade on 1 micro, and you can multiply that and find 3 or 4 setups like that a day, that's a full-time income. So I really want to show you guys, like, you don't need to have a huge account to trade and make money doing this. Now, if you start scaling up and you get consistent, you scale up. Now is when the power begins of really exponentially growing your accounts. So now you see we have that wick. It's still annotated. We broke below it, closed below it. I moved my stop loss to break even because if we are going to go lower and hit where I think it's going to go, it should not trade back up in there. It's balanced. It already disrespected that bearish PD array. There's an FVG right there. The FVG should hold it from going any higher. So there's really no reason for it to want to trade up back to that range unless I'm wrong. Now, I don't allow my take profit to get hit. I sold a little early, but again, it's a Monday. Price wasn't really accelerating how I wanted to see it accelerate. You see how the candles are very fickle, you have some down close candles, but you see how it's wicking, it's kind of back and forth. So I think I'd take my profits right around here somewhere. And like I said, it's not a lot of money, but it's all relative to scale. The same trade, if I was trading minis instead of micros, I'm up $400 right now instead of $40. So you see I closed the trade, and it does end up getting hit, my target, but it does retrace. And it's real choppy and back and forth. So really, I just decided to take my money and not deal with the chop. So, my target did eventually get hit, but before it got hit, it had a pretty nasty retracement that would have been a little unsettling to be a part of. So really, I just decided, let me get out. Let me take my profit. And, I found multiple setups like that today. You see that trade where, you only made $40, making $20 to $40 a trade. This video I put together showing a live trade I took. I know a lot. I know a lot that ICT hasn't taught just through my own price discovery. When you just look at charts all day, you start seeing stuff. Like ICT does a great job at pointing us in the right direction, I would say. And then once he points in that right direction, you're kind of off on your own, and you start seeing things that maybe he doesn't even know, or maybe he doesn't want to teach, or maybe he wants us to find it on our own.